And good morning, everyone. Welcome to our live trading workshop. It is July 2nd, 2025, in this very short trading week. As we know, it's Independence Day on Friday, and the markets will close a bit earlier on Thursday as well. So it's a very short week. The markets are calm, but we'll see if we can use this calmness to our advantage today to see if we can find some interesting trade setups, of course, with a live trading account. And especially in the futures markets today. Well, before we get into it, of course, my name is Daniel Sinek. You may know this. And in the room today, we also have Niklas, who will be manning the charts today. Now, before we start, let me ask you, where are you calling in from? Please put your location into the Q&A box of your Zoom window. Who do we have in the room today? And I can see we do have a fully packed room. I guess these live trading workshops are one of our more popular events during the week. Okay, we have Steffen from Hamburg. Hey, Steffen, how are you? Gary from the UK. Hey, Gary. What's up? Paula from Ohio. Hey, Paula. Lenny from New York City. William from Pittsburgh. Andy from Yorkshire. Wolfgang from Florida. Nice. We're in Florida. Wolfgang. Who else do we have? So we have Florida, we have Germany, we have the UK, we have the US. Danica from K-Town, Kaiserslautern, near the Rammstein Air Base. All right. In Germany. Perfect. All right. And Wolfgang of St. Augustine. That's in Florida? All right. So St. Augustine, Florida. Sounds a bit German to me almost. All right. Wow. Thanks, guys, for sharing your location. Let's get started. Okay. So a quick reminder before we get into it. Keep in mind that trading futures and any leverage products and even non-leverage products does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups and strategies discussed in this webinar should not be construed as trade advice and should be used for informational purposes only. All right. So with this, a quick introduction of who we are. So we are tradingindicators.com. My name is Daniel here on the left-hand side. And about 10 years ago, together with Homa here in the middle, we have created Trading Indicators, a company specialized on the creation of trading indicators. About halfway through our journey, Niklas has joined us, and he's been the mastermind behind many of our latest products that we're offering nowadays. And in fact, he'll be there today as well to man the charts and showcase how our indicators can help you find interesting setups. Most of what we do is based on technical analysis. And as you will see, we also try to keep it simple. And in fact, we like our indicators to do the heavy lifting, meaning all the groundwork, all the stuff that's tedious will be done by our indicators. And we as traders, all we need to do, like all in quotes, is to put all this information together to come up with some trade ideas. And of course, this session is for you. So if you have any questions, please don't hold back. Put your questions into the Q&A box, and we're going to go through these as we proceed with this webinar. A couple of ground rules. First off, today's focus will be on day trading. Of course, this will be an approximate 2-hour session. So we're trying to open trades and potentially also close trades within this session. However, even though the focus will be on day trading, the principles and the indicators that we'll be using today can be transferred to swing trading and longer time frames as well. So no problem there. We also will be using TradingView today because it's the greatest common denominator. So even if you're on Wave or NinjaTrader, chances are you've used TradingView before. And the indicators, however, that we'll be using on TradingView, they will work just as well on Wave and NinjaTrader in exactly the same way. We will be taking live trades today to illustrate how our strategies and setups work. Seeing that this is a very limited or time-limited session, sometimes for illustrative purposes, we may force open some trades just so that we get into the market at some point or close them even prematurely. But we're going to point out when this will be the case. All right. Now, are we going to have all winners today? Well, hopefully. But of course, there are no guarantees. We are on a very good streak. on the last live training workshops that we've had, we were quite successful. So hopefully it will continue this way. But of course, there is no strategy out there. If somebody promises you this, he's lying to you. There's no strategy out there which will get everything correct and which will only have winners. However, having this said, of course, we will do everything in our power to increase the odds of having winning trades. Of course, why wouldn't we? After all, we are trading with our live money in this case. So we're going to do a multi-time frame analysis, for example. We're going to look at where support and resistance is. We're going to look at the volume profile to see where the action is going on. We're going to use extra confirmation indicators to see when we should get into the into a trade or perhaps out of it, and we'll try to avoid major market events. And for this, we're going to soon start off with having a look at our market calendar. In fact, I'm going to do this right now. So I'm going to switch over here to our trading view. All right. And I'm going to open up the market calendar right there to see what's going on this morning in the market. I think, let me just remove this filter here. Let's see, what do we have today? So it's 9:30 right now. The next thing that's going to come up is, a speech by the European Central Bank at 10:15, ranked as a medium impact event. And then later on, there's some news about crude oil at 10:30. Yeah, fuel, all related stuff here. And then gasoline might be affected at 10:30 as well, and so forth. So we'll keep an eye on this. But overall, if you just look at this filter here for full impact, nothing really is happening today. So this is good. This is good news. And as I mentioned before, it's a short trading week. Chances are markets will be relatively calm, but hopefully we can use that calm to our advantage. All right. So, and now going back to my slides real quick. Also, and I'm going to keep this as short as possible because, of course, today's topic is live trading. So we're going to get to the charts in just a second. But just to review, we are going to use our 3 steps process to find and confirm powerful setups. So what are these 3 steps? Real quick. First off, we're trying to understand what's going on right now in the market. What's the story of the market? Once we have a good understanding of what the story of the market is, then we're going to try to predict, okay, what may happen next? What's the next chapter all about? So basically making a prediction, a forecast about future price moves. And then we're going to look for confirmation if needed by use of one of our signal indicators. Now, real quick, which indicators will be at play today? So for the story of the market, we're going to use MA Rush to figure out what's the current trend, because oftentimes it's easier to trade with the trend than against it. So MA Rush will serve that purpose. Then we're going to also look at where are key support and resistance levels. And for this, we're going to use our Liquidity IQ indicator, which is designed to show exactly this on our price chart. Then we're going to also look at volume, and specifically at our volume profile indicator to see where is the heaviest trading volume, at which price levels, where perhaps are low volume nodes, what's the directional bias at certain price levels, whether bullish or bearish, and so forth. So Volume IQ will serve this purpose. And then, as we see fit, we may also use Trend Radar to see what the current market conditions are. We're going to discuss this indicator as we apply it to the chart, and also TI Matrix to have an overview of what is going on the other time frames other than our chart time frame. So this is for the understanding what the overall market story is. And once we have a good understanding of that, then we're going to try to predict, okay, now we see what's going on in the market. Let's try to predict what will be happening next. And for this, we basically put everything together, like what we see on the chart here. So, for example, here we could say we are bearish, we just bounced off support, we are near a resistance zone here, and we just broke below the zone of control. And if you put all this together, for example, and we're going to explain this as we go through the charts, you could make the prediction, okay, price will further decline. And also we could say, okay, if this is our prediction, then our target should be just above this support level here, because prices may bounce off from this level to the upside, and our stop loss would just be above this resistance level here. Why there? Because if we break above this resistance level, possibly this prediction actually was not correct, and we should get out of this trade as soon as possible once we know our prediction is not going to be correct. All right. So, and then what you can also do, so sometimes we just gonna jump into the trade right now, once we have this prediction right, or we could wait for an extra confirmation. This is where our trade signal indicators are coming in. So as you may know, we have our power bundle indicators, but also super trend and super signals and so forth. And these indicators can give us the extra confirmation on our price chart, basically telling us, all right, our prediction seems to be correct, and there's evidence that prices are starting to move in the anticipated direction. Because these indicators, they give us concrete entry signals and also exit signals. So 1, 2, 3 strike for this purpose, divergence cloud, another signal indicator that we could use, or also volatility crusher and some other ones that we have to our disposal as well. All right, now this was a quick overview. Now let's get real. Let's go to the charts. And Niklas, are you there? Would you be able to share your screen and review quickly what our chart setup will be today?
Yeah, sure. Can you hear me okay?
Yes. Perfect.
Okay, so I'm going to share my screen.
Yeah. All right. There we go. Okay. And I'm going to hide my video so that you can have your full attention to Niklas's charts. There we go.
Okay, can you see my trading view?
Yes, we can see MNQ.
Perfect. Okay, yeah. So to start off for all of our charts, when we do the first couple steps to get the story of the market, we're going to have, like Daniel mentioned, MA rush on the chart, which is our trend chart. By default, I'm on the 15-minute chart. We're also going to check out maybe the 5-minute, and perhaps when we're getting ready for a trade, we might check a little bit of a higher time frame just to confirm where the levels are and what the chart looks like. By default, I'm going to be on the 15-minute. MA rush, we don't do this usually. Daniel, let me know if you want me to switch it back to chart, but I've got it on the 1-hour reference time frame just because the market's been really rangy on a lot of symbols recently. So I want to get a read on, well, what's the really overarching trend?
Now that sounds great. And just in case you don't know what this reference time frame parameter is, this is a parameter which basically you can let the indicator know via this parameter, hey, instead of using the chart time frame, use a different time frame for your analysis. In this case, even though we are on the 50-minute time frame, we're telling MA Rush, our trend indicator, hey, consider the 1-hour time frame as your base time frame to do your trend analysis.
Yeah, and a good thing about that is, when I saw a comment in the question in the Q&A box saying, it's kind of hard to avoid market events recently with all the news and stuff and wars and things like this. And yeah, I totally agree, which is another reason why I've put this on a higher reference time frame so we could really get big picture. And it also means that when there is a shift in trend, it's probably more significant because it's not based on such a small time frame. So, for example, on MNQ here, we can see, hey, we just swapped to bearish. The trend just swapped to bearish this morning around 2.5 hours ago. And the next step we're going to take after we use MA Rush, which is basically just to tell us what's the general trend direction, is Liquidity IQ. So Liquidity IQ, I'm also putting on the 1-hour reference time frame. It's not unusual that we do this here on Liquidity IQ. What would be unusual is if we were using the chart reference. So by default, it's going to say chart as the reference time frame. We always suggest put it to a higher time frame, unless you're maybe on the 1-day chart, like a long-term investing or swing trading time frame. But I've set this onto the 1 hour, so we're going to get some longer-term, more significant levels. What can we read from that? Well, first we read that MNQ is kind of starting to swap bearish. With Liquidity IQ, we can see, okay, what's the range we're in? Well, this morning, we have our all-time highs resistance up here around 23,000, 22,930. That's pretty far away, but the nearest and most significant level we can see is probably this support level down here. And actually, if we zoom in a little bit, we can see there's two support levels. One that's based on this previous pivot low that just happened yesterday, right before the lunch and learn webinar. Price came down, hit this level. There was a liquidity capture, which means there was a ton of volume, but the level held up. We bounced. Now, what's happened? What's transpired since then? We've come back up and come back down. And this morning, just an hour and a half ago or an hour ago, we came down, we made a lower low, we retested, and there was a lot of trading volume. It bounced again. The next thing I'd be interested in, yesterday at the Lunch and Learn, and what we said was we noticed this around 12:45 that we had hit here, and our prediction, or what I was thinking might happen, is we might come up to what was an important zone in the volume profile. And I thought, hey, we're probably going to rebound off of that zone of control, which was this zone right here. We didn't come all the way up to it. But the next step in the story after we see these levels is now we try to zoom in and predict more precisely what exactly might transpire. So we put on our indicator here, volume IQ, which is the volume profile on the right, so that we can see, well, which areas, which price ranges on the chart have selling volume or selling bias, like we have right here, or buying bias, like up here, down here, and which zones have lots of volume, which ones are a high volume node, like this one right here. And actually there's an option, if it's not so clear inside the indicator, to say, for the action zones, tier labels, rectangles, set them to numbers. So this will tell you, instead of putting 1 or 2 squares, it's going to say 2 or 1 to tell us if it's a tier 2 or a tier 1 zone. And let me just make that text a little bigger. Okay, so a tier 2 zone is kind of the most important zone on the chart. It means that that's where the most trading volume occurred. But you also have to kind of learn to read the profile. So looking here, what we would see is we came down, we bounced off of this support level, trend is going bearish, and now above us is a super high volume node all the way up around 22,820. If this gets broken, we're going right once we break this zone, that's where a lot of buyers come to step in. And that makes sense. We're getting close to all-time highs. It's probably going to break out if this zone gets broken. So what we would be thinking right now, though, or what I'm thinking, and Daniel, please feel free to step in, is right now we've got a lot of sellers right here, and you can see price is still blasting through them. There's a lot of sellers. If we get through here, we get through this big chunk of volume, I'm thinking we're probably going to come back up to visit this zone. And the indicator is kind of telling us this is a low volume area right here. This is called a tier 1 zone. It means there's not a lot of liquidity, and it's blue. It's a tier 1 buy zone, we call it, because once you get into that area, there's probably not going to be that many sellers, and we're probably going to get bought up through it, and we're going to accelerate quite quickly, and accelerate to where? Well, probably to this ceiling right here, this tier 2. And I would be thinking this is a good spot to maybe try a short trade. If we got up to near that zone, placing our stop loss just above it. And the reason for that is it's good reward to risk. We do technically have a bearish trend swap. If we come up there, there's a good chance traders are going to start selling. We've got nice reward to risk by placing our stop just above it. And if price does cross through it, well, we're stopped out, and then we can start thinking about changing our tune and maybe seeing it as a potential long trade for a visit up to the all-time high up here. I'm kind of doubtful, though, that we're even going to make it up there right now. Trend is bearish. I think we're going to come down and visit here. There's a lot of sellers right here, and it's not having the easiest time in the world bouncing up all the way through here. So if I was a little more gung-ho about it, I might actually consider taking a contract short here if it starts to stall out.
I think scaling into a position, this is a good, I agree with your market story here and the prediction that I believe we are more rather bearish than bullish, and scaling potentially into a position with a small size at this point is probably not a bad idea. So maybe just a short limit order just above current price levels to scale in one contract, just to get our toe in the water to see what's happening. So this could be a good idea. And while Nicholas, you're setting this up, a quick explanation of how we place our orders. So first off, we are connected to our interactive brokers account, which works really nicely with TradingView. You can see it there. And once you are connected, what you can do in TradingView, you can place your trades directly in there. And a couple of things that we like to do is, first off, we like to enter by limit orders, so not by market orders, to avoid slippage. You can see it here. And of course, we also place, we use a target and a stop for all of our orders. So in this case, as you can see
it here, with this limit order, Daniel? Sorry to cut you off, but
this is for one micro contract, just above price. And just to get our toe in the water, let's see if price will come up there. If we feel it's not coming up there, we may even move it down a little bit. But let's just keep an eye on that position for a little bit. Ideally, I don't like to chase price. That's one of the things I taught myself over the years. because it gives me a good and fuzzy feeling to get the entry price that I actually wanted. But of course, sometimes this will have the side effect that I will miss out on a trade.
And
But
Daniel,
yep,
I'd like to discuss this trade with you if it does get filled. So you were saying to get our toes in the water, because I was thinking if price does come all the way up to here, our stop loss would have to give it some room because this, the ideal short trade would actually be entering up here, probably.
I agreed.
Um,
Yeah, even a
you
bit
know,
higher, I would say. Once we get into this buyer zone, then I think we should change our tone and get out of this trade. But yeah, I would. I'm a big fan of giving my trades a bit more room, but then don't change my mind afterwards. So, um, I would even put it just a bit. You see this one swing high there, just on the left hand side, just there. Yeah, that would be probably my stop out point. If we get above this point, I think then chances are we are going to see uh, a reversal on tone and we're going to be bullish. But yeah, let's see what happens. So this seems like a good trade. And we may even add, as I mentioned, to this position as we get closer to our zone 2 there, which we see or we think might be the resistance zone, which will ultimately drive price further down.
perfect.
Good.
And Daniel, one other note was I would actually move our limit order into here because this is a tier 1 zone. If we come up to there, we're expecting it's probably going to go quite a ways into that area anyways. You see what
If
I'm
we get
saying?
up there, yeah, yeah.
So I would put maybe our order a little bit higher just so we get a
So,
little bit of a better entry price. What do you think?
yeah, sounds good.
Okay, perfect.
All right. So that was micro Nasdaq. So we're going to keep an eye on this. And one thing that we don't want to do today is we don't want to over leverage ourselves. So as you may know, Nasdaq and ES, the S&P E-mini or micro futures, they are often correlated. So entering into two short positions on these two contracts probably is not the best idea because if they move in tandem, we would over leverage ourselves and basically would double down our risk. This is something we don't want to do. So we want to try to be as diversified as we can with our trades.
I'm
See,
just going to leave it where it
Nick,
was.
yeah, Niklas has the tendency of getting eagerly into the trade. I'm more the patient person. Okay, well, we'll see. Let price come up there. I'm not gonna chase it down.
And
We'll
I
see who's
figured
right in the
too.
end.
And also, I'm actually going to move it a little bit more because I was thinking, oh, I'm going to bring it down, make sure we get our fill. But where I was bringing it was to around 22,748. And really, if you trade NASDAQ often, if it's going to 748, it's going to go to 754. Rarely does the symbol go up to just before, a halfway mark, like 750 or 850 without breaking it to some extent. So that's why I decided not to push it down. So do you want to start looking at some other symbols here?
Yes, please. Let's look at gold. I like gold a
Okay.
lot. We actually checked the markets a bit beforehand before we started this workshop. So this is the gold contract. And gold is bullish. You can see Emmy Rush says bull there. So we swapped from bearish to bullish. And now, we hold back a little bit off this resistance level just above price. And look where we are right now. We just pulled back to this level or tier 2 action zone of our volume profile indicator. And my thinking here was potentially a quick scalp, and you have to really think of this as a really quick scalp, could be to enter into a long position here in the anticipation, okay, we're going to bounce off this support level and we make another run at the resistance zone just above it. But of course, the resistance zone is really, really close by. So this would be a super quick scalp. It either works or it doesn't work to the long side. So Nicholas, I think this could be also an
Sure.
interesting trade here just to place, once again, a limit order on MGC at current price levels with the stop loss just below that swing low at the bottom and our target just below the resistance level. Yeah, something like that. So it's a quick scalp, target just right there. And you can see we have to be very aggressive with that trade because there's not much room. And there's a good chance, well, we'll see what's going to happen. Gold is fighting with this resistance level. I think also yesterday in our lunch and learn, the option professor pointed out that this is a key resistance level where gold or the price may struggle with initially. So let's see what's going to happen. Let's see
And
if we
one
can
other
get a
note,
fill.
I
Yeah.
was thinking, I think we're definitely going to get filled, but one other thing why we're placing the stop, So close by is I thought, look at how top heavy this volume profile is here. All the volume's up here. You can be sure there's a lot of traders going long. If it does start to lose this zone, there's a good chance it'll fall pretty quickly. So you don't want to keep moving your stop downwards. Either it works or it doesn't, like you said.
Exactly. Yeah.
Okay.
All right. Let's quickly check our MNQ. Did we get filled
No
there? Did
fill.
you?
No.
No fill. Okay. Okay. We're still there. Okay. Perfect.
And okay. So 1 second. All right. So let's go back and let's maybe take another look at the other metals if they're not too correlated.
Yep.
And I'm just going to double check. I know where our limit price is on MNQ. It's in 50. It's around 754. On here, okay, it's around 3345.
All
Okay.
right.
So we checked out gold. I don't really like the silver chart. I mean, what is the trend? The trend's bearish, but it's kind of turning bullish. It's very rangy.
Yeah.
We're not
This
near a
is,
tier two.
yeah. That
It's a huge chunk of volume. It's not clear to me what's going on here.
that's exactly the point I was trying to say with to also confirm. Yes, sometimes, and maybe you can enlarge this chart because we're switching context a little bit here. Sometimes the market story really is not conclusive. It's not a clear picture of what's going on right now. It's very rangy and kind of a bit chaotic, to tell you the truth. On this particular chart, this is silver, by the way, micro silver. And this will happen. Sometimes you will have a chart where you just can't really make sense out of it. It's very possible. And if this happens, there's two things you can do. Number one is you can try to zoom out a little bit. One of the lessons that we have is sometimes, if you go bigger picture, if you go from the 50-minute time frame perhaps to the hourly time frame, maybe things will become clearer. It's a possibility. So let's have a quick look. But my intuition tells me probably not. It's really rangy there, and it's really hard to predict what may be happening
To me, it
next.
looks, Daniel, like this is the line. It's a good thing we zoomed out. It looks like 3670 is the line in the sand. Unless we get above that, it's bearish. Whereas when we were on the 15-minute, it looked like we were bullish, or we were lifting off. But I would like sit on my hands here
Yeah.
until we break this. That would be a sign, maybe put an alert there that we're going to go to this resistance.
Yeah, I totally agree.
Um,
And Nicholas, yeah, and if things are not so clear, especially if you have to really zoom out to higher time frames, and this is a day trading workshop, best often is to just stay on the sidelines. Okay, things are not clear here. We don't need to trade this symbol. There's so many other fish we can chase today, many fish in the ocean. So let's just move on to a different one.
yeah,
And
this one looks interesting, maybe a little bit.
so this is micro
The
copper,
copper.
also on the 50-minute time frame. So what do you see there, Nicholas?
I see clearly we're lifting off to an extent, and this might start to accelerate. So the first thing we take a look at is, well, what's the trend? I mean, pretty obviously the trend's up, but MA Rush with that 1 hour reference time frame went bullish last week, last Monday. We broke out of this rangy area in the low 490s or high 480s. Broke out. We kept getting zone break after zone break after zone break. These zone breaks were the first ones to really quickly fail around the 515 mark, let's say, or 514 and a half. This was on Tuesday. Oh, it's just yesterday. So it failed. We came back down. Then it started to build support. A lot of trading volume came in, and we broke above the zone of control. What I like about this chart is a couple things. So number one, this is a really bullish sign. Might be wrong, right? It's not always the same thing, but it's a pattern we do see happen a lot. Look at how many liquidity captures, if we could zoom in, happened here. There's like 8 or half a dozen liquidity captures. So price was really having trouble breaking through these resistance levels. There was a lot of sellers, a ton of volume, yet it still moved through it, meaning there's a ton of demand. It still managed to break through these resistances. There wasn't even a clean zone break. It just managed to slowly grind its way through. There was a ton of trading volume back here around this zone. There's like a clear drop off. See down here, it's like a gradual cut, and it's almost like a gradual cut up to here. I think it looks super bullish, and that we're going to keep heading upwards. But right now, it's a little too late for me to want to get in. We have these two resistance levels here, right here and right here. I would like this one for a long trade if we came back down to somewhere like here, expecting us to make another like higher low, perhaps here. If price came down, get a nice higher low right here. And the stop loss is easy. It's just below the zone of control. And you can even scale in a second time down here at the zone of control. And I would just like to zoom out a little bit. I think we got filled on gold too. Yeah, we did. Look at that. Nice. Great. So we're filled. We're in our trade on gold. We didn't get filled on MNQ, but it is going the direction we expected it to. But yeah, look at this, Daniel. Great idea there so far. Nice limit price. That's a great point to always use a limit order. So here's copper. Whoops, copper. Look, it's starting to take off even more. So like I was saying, it looks like it's about to blast off. On the 1 hour chart, why I'm zooming out is I want to see how significant is this breakout potentially. Let me just get rid of this drawing. I'm actually going to minimize this chart and go to the other chart where I had liquidity IQ set to the 4 hour. Just go over to micro copper. So I want to see how significant is this. There's a ton of trading volume. That's where we're lifting off of from the high 480s. This was a breakaway last week. And if we zoom out, this is like the highest price has been since the beginning of April. Yeah, and I think it's going to be a pretty significant breakout if we do manage to clear, like, let's say 520. It's been really trying for this level multiple times. And on the smaller time frames, this is like the nicest launch pad it has had to start from a 15-minute perspective. So I would really like this if we got it on a pullback to one of those liquidity IQ levels that we saw.
Yeah, I agree. Let's have a look at Bitcoin. This was requested by Chris. He's saying it's screaming right now to bullish, bullish, bullish. So what's going on with Bitcoin? We mentioned it in our newsletter on Monday that Bitcoin is struggling a lot on the larger time frames with the all-time highs. There's a key resistance level above price, which you can only see if once you zoom out a little bit further. But I'm thinking, yes, eventually we're going to break these levels. So it's all the way up there. You can see it there at 111,000. That's a key level where price has been bouncing off from quite a few times. But I'm thinking it's due. It's due to be broken. And right now, if you look at Bitcoin, what do we see if you zoom in a little bit? It's the 50-minute chart. Maybe make this a little bit bigger on current price action.
Bears are starting to lose here. That's for sure.
Yeah, definitely. And we are just at the zone of control. And look what's above that zone. Not much. It's a low volume node and it's all buyer biased. See these green boxes on the right hand side? That shows you, okay, there are more buyers in this area than sellers. So what we could do in this case is we could wait for price to clear this level. If we clear this level, the zone, tier 2 zone level there, then I think our bet would be, okay, we're going to go bullish there, but I want this level to be cleared first. And it may take some time for price to get out of this level because it's very much contested. You can see lots of ranging going on there, lots of volume there. It's a contested level. So once we clear it, I think an interesting idea could be to enter into a long position, but of course, being aware that there are some resistance levels above us. So we want to perhaps book our profits relatively quickly once we get into this level, into these low volume levels there.
Totally agreed. Yeah. So you want to wait for it to get cleared, Daniel, and then kind of get in on a pullback?
Yeah. Yeah. We'll keep an eye on that one.
Okay. So I'm just going to put a little alert there.
That's the cool thing about TradingView. I mean, other platforms do it too, but TradingView, you can set these alerts and these alerts will notify you even if you're not logged in to your platform. These are called offline alerts, meaning they will work even if you're offline by means of push notifications to your cell phone, for example, which is really cool. So you don't have to always have TradingView up and running. You can simply get notified on your phone, for example, if a certain price level is breached or perhaps if a certain signal comes in, which is great. All right, so what's going on MNQ? We still have our limit order there, and we're patiently waiting. Patience is the name of the game for a potential limit short entry here on MNQ. And I think we're gonna get there. Yeah, patience is the name of the game. And I like to get filled at my levels instead of chasing the price. From a psychological point of view, oftentimes that gives you a good feeling. All right. So let's just go a bit slower through the charts, Nicholas. Yeah.
All right. Yeah, I was just making sure I'm on a tab with some new symbols. So let me check here. These are both metals I have. Let's start cycling through some familiar symbols on a chart like oil. We haven't taken a look at oil yet.
Yeah, that's a good point. CL or MCL for crude oil futures. There we go.
Whoa, look at that. Um, Full
Huge
on
move
bounce
down.
off the resistance.
Yeah. And in fact, oil was also a symbol that we discussed prior to this workshop this morning. And yeah, okay. And we said it's very range bound. Ever since that huge drop in oil, where we lost, yeah, you can see it there in the background there. It's been extremely rangy. And one trade, of course, that would come to mind is okay, oil is going to respect its range, and we could trade the extremes. So, for example, whenever oil would approach one of the extremes, either the upper resistance level or perhaps the lower support level, we could simply enter in the opposite direction. And this, of course, would have worked out nicely. That is a 50-minute chart. But now we're kind of in the middle of these two levels. So right now, I would say we are in no man's land a little bit. And however, we would keep an eye on things. If we approach another level, perhaps the lower level, perhaps a long entry would be in order. But this may not play out within the session because you know it's quite a wide range. So price may take some time to approach either extreme.
Yeah, and we talked about this at the Lunch and Learn yesterday, which is this is a really insane, you rarely see this layout of a volume profile where it's clear that the market's only really wanting to participate in the middle of the range, right? Once it gets to the extremes, they're like, okay, I'm out. They sell or they buy or they cover their short down here. But soon enough, it's going to break decisively to one of the directions. So it is always a nice reward to risk bet that once it comes down to this zone, go long or short, pretty much even odds, I guess a little bit more biased short. But yeah, it's kind of like a clear picture of indecisiveness, right? Because any news from the war in the Middle East or combat is going to cause a huge movement. So it kind of a picture of indecisiveness.
Yeah, or being range bound in general. So all the all price action focuses around that center point in between these two ranges. You can see how volume really peaks there and drops off towards the extremes. And this could be further evidence. Okay, whenever we get to an extreme, and if history were to repeat itself, we may see another bounce towards the middle. This is where all the action seems to be. This would be the play here. All
And
right.
one thing about volume IQ is volume IQ, we call them action zones, right? And the reason is whether they're low or high volume nodes, they tend to be like some of the smartest, subjectively, but some of the most sensible places to take an action, such as entering a trade or exiting a trade. And on this one, the only action zones are either at the extremes or right in the center, which kind of just fits basic logic when you're looking at this chart, even without volume IQ.
Yeah, good
Okay,
point.
so let's check out our trades. Gold coming back a little bit to the entry price. MNQ, I don't think we got filled yet. We might have. No,
Now
not
we're
yet.
still waiting patiently, and that's good. I think I mean it's a big V shape forming up here. Um, but yeah, let's see what's going to happen. The price really recovered from this support zone below. Skip this chart for a little bit. And you can see how these support levels can hold up, how important these are to know where these levels are. And actually, in fact, our best setup, our most popular setup is a setup. Unfortunately, we don't have one right now. Some of the market conditions are like this, is where a tier two zone of volume IQ coincides with a key support level or a key resistance level. If you have this kind of setup, it's really a thing of beauty. Right now in MNQ, it's not the case. You see support all the way down there, and the tier two level of volume IQ, it's not at the same place. But if they coincide, and you can set your alarms for this, this could be really an interesting setup to play the bounce of this level, because that to me reinforces a support level or reinforces a resistance level.
Surely. And I'm just trying to see if we have a setup like that somewhere.
Yeah, I'm also gonna check quickly on my screen here. I didn't see one this morning, but of course things are changing.
Okay, I'm
Yeah.
gonna come. I want to check out some symbols that we haven't checked out. So what are some household names? We have natural gas we could take a look at. Oops, I checked out the wrong type of symbol here. Okay, so gold, we're still chilling out right here. Um, up a little bit. I want to keep that eye on MNQ. The way it's looking, so another phenomenon you might see if you use Volume IQ, we actually built a strategy based on this once when we had a Volume IQ segment of Lunch and Learn, is when price manages to grind its way and break through a full seller zone like this, that's actually very bullish because there was a lot of people betting it's going to go down or going short or selling their longs. And now the market has proven it's broken through that. So everybody who went short here or sold their long, starting to regret it. And oftentimes it'll cause, some fuel upwards. But we still do have another seller zone up here, and it still needs to break this tier 2. We did just swap bearish. So I want to check out micro natural gas. And whoa, looks like it's doing something. Very, very bearish. Wow, no wonder it's got that nickname for being very volatile. So huge.
Well, the nickname is the Widowmaker.
Yeah. Huge swing down. And now it has a lot of liquidity capture. So a lot of people are stepping in to support natural gas around 340. We've broken through this tier 2. There's still a lot of sellers. I don't really see something obvious here. Maybe if it came back down beneath this tier 2, I would short it, expecting we're going to lose the support finally. But right now, I mean, the trend is super bearish. There's seller zones everywhere. It's already moved up a lot. It doesn't look like a good long investment here, unless maybe you got in down at the support for me.
Yeah, one thing we could look at, Nicholas, is platinum. And from a slightly different angle. So platinum is an expensive contract, something to always keep in mind, but it is in a nice bullish uptrend. You can see it here. Well, at least in the 5 minute, it looks quite bullish. So one thing, what we could do here is either we could wait for what we call a zone break retrace trade. So you can see here, platinum broke above its its resistance level, then came up, it came down a little bit, and now potentially we may see another pullback towards this level. Even if we don't, if we put on trend radar, for example, and we could say, all right, maybe we're going to wait for a pullback on trend radar, we could enter into the long direction of this contract in the anticipation, okay, this bullish move is going to continue. So basically waiting for a little bit of a red patch on trend radar. Yeah, well, the indicator below the chart. Right now there's none, but we're going to wait for a little red patch. If we see a red patch of level 2 or maybe level 3, this could be an interesting long entry opportunity into a long position in platinum. And this is further supported by the fact that we do have a clearly defined stop level there. If we get below this resistance level from which we broke out to, I think prices are going to drop further down. We should get out of this trade. So this could be an interesting way to enter here as well. But we have to wait, of course, for this pullback to come up. All right. So
sorry, I was muted. I'm just going to come over to copper. Yeah, look at this. Really, man, this would have been a really nice one. Really taking off. Liquidity capture. Such a clear. It looks like, when oil does move, whether oil breaks out or breaks down, it's going to blast off when it goes up or down.
You mean copper?
No, I'm talking about oil as well, because oil has the same layout like this, where there's it's really range bound, but if it breaks out to the upside or downside, it's going to be huge. And that's what we're already seeing here on copper. I would think it's going to come down a little bit for a retracement entry. But if it breaks this resistance, that's a big deal. I think we might get another scenario like this back here if we do break that.
One thing you don't want to do is to enter long right now at this level, because we are right at resistance. You see this resistance level there, and we had a liquidity capture event, which is this little shaded area there, meaning this is a high volume bar forming right now, which is unable so far to penetrate the resistance level. And oftentimes this is a sign of a bounce off this level. So one thing, if you would be very aggressive here, what you could do is to enter actually into a short position there to play the short-term bounce off this level. You would have to manage it very aggressively, because it is overall copper is bullish, so it would go against the trend. But resistance is named resistance for a reason. So one thing we could do there is potentially do a very quick scalp to the short side.
and I'm interested. Sometimes I'll do this. It's a little obsessive. It's not the nicest thing to do, but I'll check on a smaller time frame to see, okay, where are sellers really starting to step in? And right here, I don't see that. There's definitely more buying volume, but there was a lot of volume there, and there's clearly a block order somewhere in the depth of market here. There's clearly a big block order because there's a lot of buyers coming in, and it still hasn't moved up more. But yeah, I really like it if we get a retracement at least. Let's go back to the 15-minute. And let's check out a couple other symbols. So MNQ is going against us. I know that. I think gold, and this is to be expected. I mean, this is a huge V pattern. Sometimes these just, and we did predict that once we placed
Oh,
our
we got our
limit
fill.
was
Yeah.
we're probably going
Okay.
to be coming back up to here, which is like the last line of defense before we have to swap our vision board here about what we expect the story to be, right, Daniel?
Yeah, that's fine. This was meant to be, putting our toe into the water, getting scaling into a position, but knowing that prices are likely to come up to this tier two zone. Why did we scale in there? Because we didn't want to miss out. So we do think potentially we'll see a reversal of price from we swapped the bearish trend as per Emmy Rush. Oftentimes that's a compelling sign that okay, prices will decline for a little bit, but the real turning point might only be at this tier two zone right above us. So let's see
Perfect.
how this turns out.
Yep, and I think gold's around our entry. Yeah, pretty much exactly at our entry. So we'll see. And one thing you see often with gold and MNQ is they're inversely correlated sometimes. So if one of the trades goes bad or goes the opposite way, the other one may as well. But that's why we've got these wide stops. We're still not through what's basically the volatile point of the day, which is 9:30 till about 10:45, 11, usually when there's no events. So we're still in kind of the heated, decisive moment of the day where they're starting to pick direction with a lot of volatility. Let's check out a couple other symbols. And also, do we have any symbol requests? That would also
Yeah,
be
let me
interesting.
check that. What do we see?
Oh, here's our trend line from yesterday on Treasury bond futures. Our idea was in the lunch and learn that price might come down. We were saying we'll see what happens at the tier two. It lost it. And then we said what's going to happen at support if it comes down there. Um, Still a very long-term bullish. I think I had MA Rush on the 2-hour though. I might be wrong on that one. In this case, is that still? No, it's okay. It's been bullish since the beginning of June. Coming up, coming up, coming up. Lost an important area here. What I would do on this one is zoom out to longer time frame, like a 30-minute, just so we have a better volume profile or more information in the volume profile. And yeah, it did lose a tier two. So it's a little bearish, but sometimes that's like a little bit of a fake out. I really like this one if we come down to the support level for a longer, a little bit of a longer time frame futures trade. It's just T-bond futures. If we came down to here, really clear reward to risk. We're either going to bounce and go into a bounce and return to the tier two, or we're going to get lost into this seller zone and sell through the support. That one is an expensive contract though. Let's take a look at oil.
Yeah, oil, I think it's gonna be a write-off for this session because we're just in the middle where you can't really make any calls. You can see how we bounced off this resistance level now right to this tier two. Would I make a call here? Perhaps we're gonna bounce off this tier two. I think it's too risky. It's really a 50-50 coin cost, in my opinion, where prices will go next, either to the lower support level or once again up to the above resistance level. So this is something I potentially would not get into right now. It's too random where prices may go next. Would you agree, Nicholas?
Yeah, totally. Like it's just totally random. They're clearly building, like big money is clearly building a position in this range, but they're not making it obvious where they're going to make it go afterwards. The market's not making it obvious where it's going to go. It's just a bunch of random ranging with occasional spikes to the up or downside of the range. So I totally agree. Let's take a look at the Russell. I don't think we looked at that.
Yeah, actually, the Russell is an instrument which, oh, this is a nice one. Look at this. Actually, we didn't look at it because oftentimes I'm thinking to myself, let's just stick to one index future because there is correlation. But probably the most uncorrelated index future from all the other ones is the Russell, which has, as we say, a mind of its own oftentimes. And what we can see here is actually a beautiful pattern. You can see it's a zone break retrace pattern. We broke above this resistance level, came up, and then we retraced back to this broken resistance level, which is now acting as support, as you can see it here. And yeah, I think if we come down to this level one more time, potentially this could be a nice long entry, because the Russell has been quite wild throughout the last weeks and months. But yeah, definitely an interesting one. We also do have a level a tier two volume zone below that. They don't really coincide. It's somewhat in the middle between support and resistance, but this could be our second last line of defense here. If we were to use a wide stop loss, it would potentially be below this level too, even though to me maybe a little bit too wide for my taste for a long trade here.
Luckily, I mean, this is also good advice for if you're if you're trade you want to trade with less capital, is the Russell's really cheap contract.
Yeah.
So if you go one micro contract, I mean, even coming all the way down from right now to here, like how much would that be? Let me just check. I'm just curious. You know, oh no, okay, it's a decent amount of money, but it's a lot cheaper than the other contracts, at least in terms of percentage moves. And we called yesterday. You were saying, Daniel, this is kind of in the middle of a range, but yesterday during the lunch and learn, we spoke about this breakout. It was happening. We said, oh, it would be a nice long to get it on the pullback to the zone. And if it breaks that, to just exit out and then wait for a pullback down to here, because this zone is clearly important, because the break above it is what triggered initially this huge move upwards once price regained it. And it does kind of coincide with this old zone back here, this old level, which acted as resistance and then supplied a zone break retrace opportunity. Yeah. So yeah, definitely like it if we get a pullback.
Yeah, and there's a question coming in for this particular Russell symbol is, can you explain the blue and red zones it bounced off from, the overlapping blue and red zones? And I think the overlap comes in because we have volume IQ on it. So maybe just quickly hide volume IQ. So without that indicator on, there's no real overlap there. So the bluish zones or greenish zones, whatever the color may be, is a resistance level. But of course, take this with a grain of salt. Resistance can become support once broken. That's what we're having here. So resistance broke prior to that, and then it switches its role. It became support, and you can see how prices bounced off that level quite nicely afterwards. And of course, the red zone below, that's a classic support level. You can see how price dropped off or bounced off very nicely prior to that from this level.
Yeah,
So
and when we put on volume IQ, okay, now you have that overlapping, and you'll actually see this a lot, where there's going to be a red zone when you're above resistance, a red zone at a basically at a blue zone at a resistance zone. So this red box right here is, you see there's a 1 right there. We call it a tier 1 sell zone. Basically, tier 2 zones are zones where there's tons of volume. There's areas where there's tons of volume, and it's going to act like a decelerator. So when price gets to that area, it's probably going to slow down because there's a lot of traders there. That's why there's a lot of volume here, because historically, whenever price enters this range, a lot of people start placing orders, and there's a lot of either support or resistance. That's why it's called a tier 2. The tier 1 zones are zones where, look, there's basically no volume relatively. Not a lot of people place orders here. Right here, relative to the other nodes, not a lot of people place volume. It's like a drought of volume. Down here as well, look, there's a gap, a cutout. Here as well, there's a cutout. And usually, when there's a tier 1 like this at a level, it means that whenever we get close to this level, price is going to accelerate through it because there's not a lot of orders or volume that are going to step in to act as support or act as resistance. And usually what you'll see, that's not uncommon, you'll see a tier 1 zone around a resistance or a support, and then you'll look back historically and notice every time it came up to that level, it just blasted through it. Like, look here, it came to that level. Not a lot of people like to put their orders in there, so there's not going to be a lot of stuff, a lot of liquidity slowing the move down, so it just drives right through it. And similarly, this area here, kind of low volume. It's a tier 1 zone. We noticed when price came down to it last time, it dropped quickly down to the support. Then when it came back up, it drove up quickly through it. And then it started to slow down once it got to the tier two. So that's what those tier one and tier two zones are. They're from different indicators relative to the resistance. This is volume IQ and this is liquidity IQ over here. Okay, I'm going
Yeah,
to take a look at our trades, Daniel.
that's
MNQ. Okay.
MNQ is pushing a bit higher, but that's yeah, what we anticipate. And gold is just chilling in. The price is a bit of a recovery there to the upside, and hopefully that will be the start of that bullish move towards our resistance level up there. We'll see what's going to happen, but at least we can see signs of a first bounce of that tier two volume IQ zone.
Yeah, so another point just to illustrate that about the tier two and tier one. So we came up, or Daniel came up with the idea for this trade because we came up here, we hit resistance, we started to come down, and Daniel said, look, there's a tier two zone, which like I just explained, it's supposed to decelerate price, or there's going to be a lot of orders coming in. So when we come down to one, we're expecting that's where the falling is probably going to slow down or stop. Might be a nice long trade, at least when we're in a bullish trend. Okay, so I'm going to go check out now.
And we have a question, Nicholas, for volume IQ. What's our look back there in terms of the bars? And I
Let me
think
check.
Scott, you are probably on Ninja Trader or Motive Wave, where we have a specific look back setting. We don't have the setting in Trading View, so it's using the default. Do you remember what the default was in Trading View?
Do I remember? Let me check. I'm trying to check our code over here on my other screen. It's 500 bars. 500
Okay.
bars.
Yeah.
So NQ really starting to try a move upwards. Let's take a look at that. Now it's really starting to move. So as we expected, this is basically the last line of defense for a short biased view.
Yeah.
We put MA Rush back on the 1 hour.
So what we could do now here is to basically put another limit order in at this level 2 zone, scale in basically into this short position in the anticipation. All right, this is our second line of defense. It's a high volume node. It may act as resistance, and in line with our bearish trade of MA Rush, we may see a bounce off this level towards lower price levels. So that's the idea here.
Should I place the order, Daniel?
Yeah.
Okay. Let me just move this right to here. Okie dokie. Cool, okay. Gold is trying to cross the 3,350 level. Okie doke. Let's take a look right there. Okay. And Russell, we had also, I wonder if our alerts got triggered on anything. And MNQ's moving up, so I would assume that Bitcoin's moving up. So sorry for jumping through charts. I'm just going to go back to Bitcoin. Why didn't our alert get triggered? Maybe I didn't notice. If I check the alerts. Oh no, it did trigger, just didn't see it for some reason.
What do we see on Bitcoin here? So we see a move, a bullish move, and a bit of a retracement now.
I'm actually
On
going to move
this
to the 5 minutes so we could see the retracement there. Okay.
Yeah. Okay. I would love to see it pull back towards this level 2 zone a bit further down and then potentially enter in the long direction of Bitcoin. And this would also hedge a little bit our short position in NQ. I think they are sometimes correlated. So if NQ moves up, Bitcoin also tends to move up. Not always, of course, but this could be a nice hedge on that one if we see it come down a bit further.
Yeah, totally agreed. They're moving very similarly today. MNQ dropped more, but yeah, they're moving up at the same time a lot of the time. Okay, so this is on Bitcoin. Are there any other futures we usually look at that we didn't look at? We didn't look at anything like soybeans and wheat futures and things like this. Soybeans kind of looks interesting here.
Yeah, we do have some similar requests, but they're for stocks. We're gonna look at the stocks a bit later today because it's gonna be probably be more from a swing trading point of view. And MNQ is pushing higher, so I'm wondering if do we get filled? Or did we
No
get
way we
filled?
didn't get filled, I'll tell you that much. That's for sure. We can go to MNQ. Our order is around 825 or something. Yeah, 825.75.
Okay.
It's got a ways to go before we get filled. And look, this is, I mean, longs. Anyone who went long back here must be loving MNQ today. Because that's a huge, how much is that? I guess it's not that much. The market's kind of slow recently, but it's still almost 200 points that it's moved up in the span of an hour.
Yeah.
And this
Well,
is
let's
on
see
the
what happens. We are still bearish, so potentially the reversal is still a good possibility. That's our thesis is not broken because you see this big level 2 zone there. That's our projected turning point of this move. So let's see if it's gonna pan out.
Yeah. And I'm going to check out two other things. One is gold, and two I want to take a look at is copper. Okay, gold. Okay, well, it's still developing. Gotta be patient. And I'm just curious about copper. Probably more liquidity captures. No, still the same one. I think it's probably going to break out. And let's just watch MNQ. And do we have any questions, Daniel?
Yeah, let me just quickly look at the questions. Yeah, we have symbol requests. Chris says big move in platinum today. Very good 1 to 3 signal a few days ago. Yeah, yeah, platinum was a big mover. So, but right now I would probably not enter into this bullish move because we're a bit late to the game. So, probably a better idea to to wait for a pullback in platinum because now things are extended there. So we may want to wait for a pullback and then potentially enter into the long direction.
This is interesting. Here I put divergence cloud. It's actually got a stop loss right below the tier 2, but it's not doing so well. Obviously, we're in a huge uptrend on the 15-minute on the short side. Divergence cloud here. I would be sooner trust its long signals than its short signals. It's not doing so well on the short side. Makes sense. On the 5-minute, it is doing a little bit better on the short side. Recently got stopped out. And on the 5-minute here, it's a good thing to check sometimes smaller time frames. What do we see on the 5-minute? Well, on the 15-minute, the big tier 2 zone was around the 820s. So right around here where our sell limit order is. Whereas on the 5-minute, the tier 2 zone is in the low 700s. So I guess today or going into yesterday's, or maybe yesterday, a lot of trading volume in the 700s. So until that level gets broken, maybe down here until we start selling into this area, I don't think long traders are going to be panicking. A lot of them are probably average priced around here. We'll see what happens. And there is, just get rid of this, go to the 15-minute chart. And
All
one
right.
other symbol I want to check is Bitcoin again. Take a look.
Yeah, Bitcoin is pulling back a little bit towards our tier 2 zone.
When I see a tier 2 zone like this, Daniel, I'm thinking I don't see this right here as the zone. I see this whole thing right here kind of as the zone because the indicator identified this as the absolute peak. But there's not really very big differences there between how much volume is here and how much volume is here. It's kind of like this whole area is the chunk. So if I saw a pullback into here, I would actually be thinking, oh, if this gets broken, we're going to sell down to the lower half of the chunk. Maybe I'll wait down for a move into it so I can get my order. What do you think about those?
Yeah, it's once again, it's not the clearest picture. So for a long entry, we really would need to clear this level decisively. So we attempted to clear it. We wicked into this low volume node there. But overall, we're still bearish. You can see MA Rush is still bearish on Bitcoin. So this would be conflicting information. So potentially looking for a long, but MA Rush is bearish. Not the clearest picture on Bitcoin. And unfortunately, the whole market itself today, it's not uncommon for a short week. It's kind of rangy and things are not as clear as they sometimes can be. But that's the name of the game. Sometimes you just have to patiently wait until you get some clarity, even if this means just wait and see and don't sit on your hands for a while.
Very nice bounce there off of Russell that you were talking about before. That would
Yeah.
have been a nice one to check out. Came down. Yep. I don't think we would have taken the trade anyways because we would have been a little bit late and would have been waiting for a retracement. What else do we have? M2K. Okay.
Yeah, it's
M.
really slow for peak trading hours right now. The European market and the US markets are open. Things are just very slow moving. But once again, not uncommon for a short trading week. Even gold, if you look at gold, it's just chilling in the same price range with very little volatility for the last I don't know, 30 minutes or so.
Oops. Yeah, they do. Yeah, like the symbols are moving decisively, but they're just doing it super slowly.
Yeah.
Oh, okay. Yeah, gold is still sitting. What else is there?
I want to break that zone. If we break above this tier two zone, if we clear it, I think we're gonna move fairly quickly towards our resistance level on top. But we are right now on this tier two, and this is, as Nicholas sometimes says, like molasses. You get stuck, and prices will just chill out there for a long time because it's a very contested area. But once we clear it, once we move into a low volume node, you can often see like an acceleration of price. Price will just power through that level fairly quickly. And that's our idea here. So that bullish trend is intact, and we just want to move after this pullback now towards our resistance level, and then we're gonna get out because from there we may bounce off again. This is exactly why we placed our limit order, our take profit order, right below this resistance level. So that's our trade plan here for gold. All right, so I'm gonna check on MNQ. So we're
that's
inching
sure.
we're
Yeah.
inching into our, no, we're not yet, but
Yeah.
step
No,
by
we are
step into our fill zone here.
very close.
And once again, the idea here is to play to anticipate prices to bounce off this level. It's it's a risky move. I want to be frank about this because we had this huge correction. The things look quite bullish now. And if we lose that level, then we're definitely gonna get out and we'll take our loss here and potentially reverse our position afterwards. So we'll see what happens there.
Definitely. Yep. And yeah, we're actually technically, yeah, we're in the tier two zone. We're waiting to see how far does it push into it. And I'm trying to think, what's another symbol? What about corn futures? Maybe those are doing something interesting.
Yeah, and then we can look at some of these stocks too, which were requested.
Oh, look at that. Okay, bearish, bounced off support, came up to a tier two, starting to bounce off the tier two.
Yeah, that's the move we want to see for NQ.
Yeah, exactly. That's exactly
That's
what we
that's
is gonna
exactly
happen.
what we're trying to figure out. And Karen is wondering, what settings are we using for our indicators? So Karen, for the most part, we're just using default settings with a couple of variations. So maybe just point out quickly, Nicholas, where the
Yeah.
variations come in from the defaults.
So the variations are, well, we're on the 15-minute chart on every chart we're looking at. On Liquidity IQ, we have the reference time frame set to 1 hour. That's the only thing we did. We just set this to 1 hour reference time frame. And for MA Rush, we set the reference time frame to 1 hour as well. That's the only two things we changed.
Yeah,
Usually
and
we don't even do that for MA Rush. It's usually just Liquidity IQ, but because the market is slow and rangy, we wanted to see, well, what's the real big picture? So we set
yeah,
this to 1 hour.
and if we are in faster market conditions, so if it's not a short week, I oftentimes send my liquidity IQ reference time from 2 to 30 minutes, just because to get some levels which are nearby. But that's only if things are moving a bit faster. So today we decide on the 1 hour reference time frame to accommodate for the fact that things are really slow and range bound right now.
Yeah, exactly. And okay. All right, so we checked out corn futures. I don't think we're going to be opening any trade on corn futures. Gold, it's at the tier two zone. We know that.
Yeah, and Nicholas,
MNQ,
yeah,
they're
look at
both.
MNQ, but look at platinum too. It just pulled back a little bit. if that's this is MNQ, but if you go to platinum, platinum is bullish, and the idea here was potentially wait for it's a very small one on this 50-minute. On the 5-minute, the pullback is a bit bigger. Wait for a bit of a pullback and then enter potentially into a long platinum trade. But yeah, it's still very little. So here I would wait maybe for a bit more of a pullback. If you see it, there's a bit of a high volume node there. There's buyers around there. This could be an interesting long entry opportunity in platinum, anticipating that this uptrend we've been in, because we broke above resistance, is going to resume, and the pullback could be an interesting long entry opportunity there.
Yeah, and I think, Daniel, like I think if you're new to volume profiles, you're not going to notice these kinds of things, but that's kind of why we put the action zone to try and help make this stuff more obvious. But like Daniel said, like, okay, let's say you're looking at this chart on the 5-minute and you're waiting for a pullback. Well, what is a pullback? So two things you can do. Of course, you can look at something like Trend Radar and look for a pullback that goes back 3 or 4 rows. Or you can look at the volume profile and say, well, where are people actually stepping in to buy? Where should I wait? Where should I wait for us to come back where there's actually some sign of support in the market? And Daniel just immediately saw, hey, look, there's a high volume node down here. If we pull back down to there, maybe we should get in there. And the reason for that is look what happens after that. No volume. So you might want to enter in on a pullback here and then just place your stop loss a little bit below that at a pivot, because if we lose that level, no one's going to be stepping in. We're presuming not a lot of people are going to be stepping in to stop it from going all the way back down to the tier 2 zone. So the volume profile is really like one of the best storytellers for what you can probably expect to happen, in these little interim moves between the ranges, between support and resistance. If we pull back, it's probably going to stop pulling back around here, because that's where people like to buy. There's been a lot of volume there. And if it doesn't stop there, it's probably going to drop all the way back down to here. And these are like patterns you're going to see on every chart, and they do tend to play out pretty often.
Yep, absolutely. So let's see what's going on with NQ. Yeah, prices slowed down a little bit. That is to be expected. We are entering this tier 2 high volume node in. Is this the right contract?
I was on the wrong time frame.
Yeah. So we were entering into this high volume node, and you can see prices, at least for now, they slowed down a little bit. This bar has pulled back a little bit. And this is the entire idea, to see prices not being able to penetrate, or at least they're probably going to enter this level, but won't be able to penetrate it, and then they're going to bounce off this level to the short side. This is exactly why somebody was asking why we are placing a second entry. And oftentimes what I do, actually, I place the second entry of a slightly larger position size to get some better dollar cost averaging, basically moving our break-even point a bit higher. But for now, we're just going to keep it at one entry, because I think it's a risky move. We had this huge correction of the support zone.
Yeah.
So speculating this could be a turning point is definitely more on the speculative side. So I don't want to risk more than one contract here. But oftentimes, if I'm more convinced, and if I average into a position, I would increase my my position just a little bit there, just to get a better entry price all over.
Yeah, totally agree. And yeah, we entered in one contract back here. Why? Because we saw that the trend was shifting to bearish. We had bounced a lot, and we were entering into an area where there was a ton of volume and a lot of sellers that we were thinking, hey, maybe it's going to encounter resistance here and we're going to sell off back to support. And we already anticipated, because we saw the story on the chart, that if that doesn't happen, it's pretty obviously going to fly right back up to here. And then that's the last line of defense. This is where if people don't start selling here, if longs don't take their profits, if nobody starts shorting, or if the market doesn't supply more contracts than there is demand, then once it breaks this, well, it's kind of blue skies ahead back to all-time highs. And we're probably going to go back up to here within the trading day. So yeah, we already knew that it was probably going to come here, and that was the plan. If we get in, we got in back here, we get in over here, our dollar cost average will be around here, and our stop is going to be, just a little bit above that. Once it gets into the blue skies ahead area, well, we don't want to be short when it's blue skies ahead for people who are long. So we'll get out, and maybe we'll switch our take. I probably wouldn't switch our take. Our position direction too quickly, though, because if we broke this, well, there's the possibility that we're going to get bought up right back up to resistance real quick, but there's also the possibility that things are going to slow down because it took a ton of trading volume to get us all the way up there. And then this 300-point move is going to get some sort of correction. So if we did break it, we got stopped out. I would wait for a significant retracement before deciding, oh, I'm going to go long now. You know, because this is a very big move. Oftentimes when you see, we call these like ping pong moves, where price comes down to the bottom of a range, bounces, and then doesn't stop at all as it blasts up all the way back to the other extreme of the range, which is like 500 points away. Oftentimes when that happens, anybody who bet that was going to happen or bought the bounce, they're so surprised and overwhelmed by the fact that they just made 500 points within the course of 2 hours that they're just going to take their profits. They're not going to be greedy, and there'll be another ping pong and a bounce off that level. So
Yeah, nobody went broke taking profits. It's a piece of
yeah,
trading wisdom.
exactly. Yeah.
Yeah, so what we see in NQ here is kind of what we were hoping for, that prices cannot penetrate this zone. So you see this sharp bounce off that level. Too bad we didn't get filled. We'll see. The verdict is not out yet. This might just be a preliminary bounce, but this is exactly what the effect was, or we anticipate that, hey, we may see a bounce off this level. This level will act as resistance. Prices potentially cannot penetrate it, and we're gonna bounce off this level. But we'll see
Yeah, it might
what's gonna
still
happen.
easily blast through. It might have just been a quick breather. But you
Yeah,
can see the principle that, hey, since an hour before we started this live trading session, that was the first red candle on the 15-minute time frame when it hit the tier 2. That's
yeah.
the first red candle in 2 hours. So there's definitely some orders came in, or traders who had similar information decided, you know what, we might not break that zone of control. Let's get out.
Are you
And
saying that more traders are using our volume IQ indicator
oh,
for these secret
definitely. No,
levels?
I'm saying, maybe there's a different indicator that has some sort of telltale, maybe a VWAP happens to be up there. Checking gold, we were saying that oftentimes it's inversely correlated, gold and the indexes, or at least NQ. And what happened when NQ started to bounce off the tier 2? Gold finally started to lift a little bit more off the tier 2. So whether this will hold up or not, it's just an observation. NQ is actually really easily recovering very fast. So that could have just been a quick little breather. And I'm just going to
Yeah.
grab one glass of water, Daniel. I'll be back in about 20 seconds.
Yep. All right. For Nicholas is grabbing some water. Let's see what's happening here on this MNQ contract. You know, the idea was that we are going to bounce off this level. You can see our limit order just above price there. It's chilling out there. We're not going to move it lower, because this is something I taught myself over the years. I don't chase price action. I rather miss out on a trade. And why? Because trading psychology is such a big deal. I want to kind of have the mindset, okay, I told the market where I want to get filled. And that gives me a good feeling instead of trying to kind of the market forcing me into a position by chasing something. So we'll see what happens. Yeah, we had this quick sharp bounce. Now market is recovering, and which is not the most, not the best sign right now.
It's not bearish, that's for sure.
It's
It
definitely
just
not
broke to a
bearish.
new high of day, or high of the trading day already.
Yeah.
Definitely.
So yeah, and you know what? We're gonna keep this position there because that's the thesis that we had. But you know, we need to be aware this is a very risky move, and we're gonna scale in one more time uh, to see if you
I'd
get
move our
filled.
stop down, Daniel. I think that would be the move um, that I would do. What do you think?
Nah, leave it up there. I
Okay.
like that little swing. Yeah,
Oh, whoops. Let me get it. There it is.
and we'll
And
see
we'll
what
see.
happens.
It's only
Yeah.
threatening so far, the zone. And let's check our gold trade. And do we have
Yeah,
any questions or
gold is
comments?
pulling back a little bit, but
Expected.
it's still okay.
MNG.
Yeah, I'm gonna look at some questions coming in. We're gonna look at the no questions. So we're gonna look at the stock symbols in just a bit. I just want to see how this MNQ trade pans out, if you get filled or not, and then we'll take it from there. Prices are pushing higher, and yeah, we're just about to get filled there. And again, the idea is we will be bouncing off this level 2 zone. And once again, we did our indicators do most of the heavy lifting. We trust our indicators. But in the end, of course, it's a numbers game. And not every setup will pan out the way our indicators are suggesting it. But that's part of trading. It's a numbers game. And the idea is that on average, over time, you will have more winners or a positive expectancy. All
Yep,
right.
definitely. And the setup's always changing. Like we're saying, you can't take it, you can't be downtrodden after a setup. Like Daniel said, it's a numbers game. The information was telling us, hey, it looks like this probably going to happen, or there's a great amount of evidence to suggest it will. And if it doesn't happen, well, then the evidence is pointing to a new setup, and we just reevaluate. We see what happens. So, like we mentioned, here, and I'm just checking on my other screen. Okay, MNQ coming through there. 824, 825, we got filled, and we got our stops right at that pivot right there you were talking about. And once it breaks this zone, if it does break this zone, 1 second, just closing my other screen. If it does break this zone, then really there's not much stopping it from going up to this resistance. There's a good amount of volume right here in this little bracket, which is probably around the 850 to 880 range. There's a good amount of volume, and the split between buyers and sellers isn't that huge. So I think that's a smart spot. Like Daniel said, that pivot. If it does break this range, I think it's only going to really start to blast off after around 880. And you'll see that often on NQ is once it gets to the 80s of what I call a century, like 100, 700 or 800, 900. Once it gets not 900, because you're thinking about the next 1,000, but maybe 580, 680. Once it gets to 80, the traders the market's resigned to the fact that it's going to the next 100. So you'll often see these kinds of cutoffs right here at 80. If it breaks that, well, people immediately are thinking 900, and it's just going to take off. And once 900 breaks, they're thinking 23,000, which is why we call it blue skies ahead if it does get above that.
Yeah, that's our call here. Either we turn or we have this lose on our hands, but that's part of trading. At least we know exactly what our plan is. It's very clearly defined. In trading, having this clearly defined plan in place will help you to not make any not so wise decisions. For example, widening your stop loss, scaling in another position just in the hope to somehow rescue this negative trade. That's exactly where you have your biggest losses. So we need to stick to our plan. This is our thesis. It either works out or it doesn't. And now it's just wait and see what's going to happen.
Yeah, definitely. And the more you try to tell, one thing we do a lot, or I used to do at least, still do it sometimes, is in TradingView, use the replay mode. Don't cheat, but just use the replay mode, close your eyes, scroll back and click somewhere, and then try to read what's going to happen based on, if you don't know, unless you know the symbol really well, scroll back, see how the indicators looked at that point in time, the volume profile, the resistance support, the trend, and just try to make a prediction or a fake trade. And, try to learn from it. See, okay, what did happen? What could I have maybe understood better? So like the story we came to here, a lot of traders that use our indicators would have come to the same story. Maybe they would have come to a different one. But we're going to see how it pans out. And, right now, the story is playing out so far how we expected it to. And we took that into account, which is why we were able to define our risk and reward and, not get emotional.
That's right. All right. Okay. So I think now, while this is, there's not much we can do with this trade now. We have our stops in place. We have our target there. Let's just see, what's going to happen. The gold, on the other hand, is looking more promising. We had this bounce that we were anticipating off this level to tier 2 high volume node. And I predict once we clear a little bit this, we're still in the high volume area, but if we get a bit higher, we're going to see an acceleration to the upside, and hopefully we will hit our target in gold today. So that's the trade that is working out nicely. MNQ is on autopilot, and let's look at some stocks, Nicholas. We had some stock requests for symbols that came in. Let me just go to
Sure.
my numbers here. So what about Tesla?
Tesla. And do we have a recommended or requested time frame?
Let's do it from a swing trading point of view. Even though this is a day trading workshop, let's look at some swing trading ideas here.
Stocks, I like to look at the 1 hour. You like to look at the daily? I mean, for swing trading?
That's what I typically use, but just to get a bigger picture. But Tesla, as you can see here, it's rangy, like somewhere in the middle of nowhere. And it's very gappy too. So
This is a
it's a
1 hour
stock
chart.
which,
Just
yeah,
go to
it's a
the
stock which is very much driven by fundamentals. We don't try to interpret fundamentals. What we do is we look at technical levels and then try to create our story around that. And just by looking at this, I can see right off the bat we are in between support and resistance, somewhat what we call a magnet zone. It's anybody's guess where prices will go next. And we call this magnet zone because while we don't really know where prices will go next, either towards resistance or towards support, it is quite likely that we will leave current price levels and we're going to be drawn to either extreme, either to the downside or the upside. But the question was, how would we interpret fundamental information related to Tesla? Well, that's, of course, very difficult because it's not just looking at whether this news was potentially good or bad for Tesla, but it's really understand how much of that was already priced in. Because markets are not, they're always forecasting things and they price in a lot of stuff and only really act on surprises. So this is why interpreting fundamentals is so inherently difficult. This is why we focus on technicals. That's our game. Yeah, so Tesla, I think no man's land. It's really in between support and resistance. Um, there was one more symbol which was requested on the stock space. Let me just
Yeah, I
quickly see.
probably wouldn't act on Tesla until we get to the zone of control. Um, Either to the long, depending on what it looks like, long or short. Yeah, like you said, it's in no man's land because there's not a lot of volume, either bullish or bearish. There's some sellers above us, but we're right in the middle of a range, and there's not a lot of volume, meaning this isn't an important area. It's basically what it means. No one cares about it in this price range. No one's buying it, no one's selling it. It's not at a high volume node, a zone of control. Yeah,
And we have Oracle as another symbol request on a longer time frame.
sure. And I'm just gonna take a look. Okay, let's look at Oracle. Cool. Okay, whoa.
Yeah.
That's huge. It doubled since April.
Wow, that's a big
Almost
move.
doubled. That's
Yeah.
crazy. Okay, big gap here, big zone break. But look, this is what I was kind of mentioning before on Tesla. Well, look, we have this exact same thing down that we were talking about right here, where it's going to happen a lot. A tier one zone, a sell zone is going to wrap around a resistance level because there's kind of FOMO happening here, where a lot of traders bought in on this breakout, but not really. Like the market as a whole didn't really put a bunch of liquidity in here. They're probably taking profits up here. And if we do return to this level, there's a good chance we're going to sell back down through it because not a lot of people are willing to buy up here. You know, it's twice as expensive as it was 2 months prior. And there's a gap
Yeah.
here as well.
Yeah. This reminds me, we are planning to create a gap indicator as one of our future projects with statistics, seeing how many times gaps on a particular symbol actually got filled over time, how many times not, because this, if you believe in gaps and gap fills and so forth, this could be something which could add some extra uh, confirmation for a particular move. Because if that move coincides with a particular or potential gap fill, well, this could be some extra fuel to a particular trade. All
There's a
right.
gap fill right here. Yeah, what I would think on this one, Daniel, is I wouldn't go long right. I mean, I don't know, but I would actually wait for us to come back down to a place where there's significant volume. So like right here. If I would expect that that we probably are going to sell off at least to this resistance level. There's not a lot of people stepping in up here. It's like people who are late to the party, relative to the rest of the volume profile. So yeah, I'd wait for a pullback. What do you think?
Yeah, definitely wait for the pullback. I would not chase it. It seems very extended. Agreed.
Let's look at our
Okay.
trades real quick.
Yeah.
MNQ,
Just
MNQ,
chill. Just chilling out there.
but it
This
did
is
get sold off quite a bit, didn't it? It's
a l-
having trouble with the tier two. Let me just put liquidity IQ on the right time frame. Well, here's volume IQ. It's having trouble at the tier two.
yeah.
We've
Doesn't mean
come
it's not going to
come
break
down.
it. I still would be careful too. I definitely would not add any short position to it.
No.
But yeah, we'll see what's happening. Gold is looking not bad. We're kind of on the verge of leaving our high volume node there, and maybe we're going to see now the acceleration to the upside, which yeah, I predicted to some degree once we are leaving this high volume node there, if we do. So
For sure.
this trade is working out nicely in our favor, as predicted. And once again, confirmation that trading is very much a numbers game. So not every move will work out, but the idea is that over time, as you take more trades, you will see things working out. Yeah, MNQ, I think my verdict is still, it looks bullish to me, and all these pullbacks, even though prices are struggling with this tier two zone in MNQ. Yeah,
And I just wanted to point out here, sorry, I'm on the daily chart of gold. Look where we are right now on the daily chart of gold. That's interesting. I didn't know that.
oh, at this high
It's
volume node, exactly
it's a
in the
tier
middle.
two on the daily chart, which is
Yeah,
very rare. That's like once every couple of years you're going to be in that range.
yeah.
So,
And this is extra. We had this gold trade as our trade of the week from a swing trading point of view on GLD.
hmm
And that could be extra evidence that we may see some ranging in that for that contract, because we are stuck right in that tier two zone of gold. But it doesn't mean that from a day trading point of view, you can't play those ranges. So I think the trade we are setting up right now from a day trading point of view is still completely valid, because these ranges that you may see on the daily chart, they are sizable and they're tradable from a day trading point of view.
yep, definitely. And do we have any stock? We have Goldman Sachs. That's a request. Check that out. Goldman Sachs. NQ starting to really move up again. Good call. Okay.
Wow, good call.
Good call on it being a bad trade. So
Yeah, great trade, Nicholas.
oh, thank you, thank you, thank you. Yeah, true. It was my idea.
No, I'm kidding.
Um,
It's just trading.
okay, so what do we see here? We did see, though, what was very convincing to me on MNQ was the shift finally in MA Rush to bearish, and it has been on a tear. So I'm not totally convinced that there's not going to be a really excellent short opportunity today on MNQ,
Yeah.
especially with the short week. Maybe we'll see some ranging. So Goldman Sachs, just like Oracle, right? Oh, well, this is every stock, I guess, right? Because this was the tariffs right here. This was the tariffs, April 2nd. Drop down to 450. It's all the way up
Right
to it's
to yeah, and right to support. Look at how beautiful that was. Nice.
and it's almost up 70, 80%. Same look, it's like this very similar story, huge breakout and dwindling volume.
Yeah, but for this one, I would definitely wait for a pullback. I think we're gonna see at least a gap fill at some point. See this big gap there. I think it's not unlikely we're gonna see a gap fill there, and then potentially a nice entry opportunity. This would also coincide with that broken resistance level now acting as support.
Yeah, and
Yep.
given how much they've all like when you look at this, it looks like the start of a parabolic move where clearly the trend is zoop, zoop, zoop going up real fast. I wouldn't be surprised if a lot of these stocks that look like this pull back not only to the resistance, but they pull back even more down to where there's actual volume, like down here. Um, so if I was waiting for a retrace, I would actually wait for a retrace even below the level. That wouldn't be surprising at all.
Yeah.
But they still look like they're about to go further. That's for sure.
Let's look at some other stocks. We had some requests. Let me quickly go to we have SYM as a stock.
Symbiotic, a pharmaceutical company, tech
All
company.
right. All right. No. All right. At resistance with some liquidity captures. Overall bearish. Yeah, here I would be careful too. I would wait what happens with that resistance level, if we can clear it or not. If we do, maybe it could be a nice breakout trade. but we may see a bounce off this resistance level we are in right now to the downside. Yep. Okay, and STNG as a request. NG, yeah. Scorpio tankers. Oh, bearish move for sure.
Oh,
Right at this level 2 zone there.
I just want to get a quick overview. Okay, so it's been in a downtrend generally since. Okay, so the highest it's ever been is around 120. Huge downtrend, got picked up around $5, $10. We zoomed up since post-COVID, so it had trouble after COVID. Then it zoomed up 800%, and now we've dropped 50% within about a year and a bit, or under a year. And now there's a lot of volume coming in. There's a tier 2 and a support level, super long-term support level. Look at this right here.
Yeah. Yeah, but still bearish. So long-term support, I mean, my prediction would still be, maybe play the bearish side of this support level. This is almost like a zone break retrace, which could now act as resistance, and it
Yeah,
coincides with the tier 2.
and it's not really above it either. It's just at it. There's a lot
Yeah.
of sellers. And even if you do blast off from this support, which wouldn't be surprising to like this resistance, that's $2 away, $3 away. That's nothing. And then above us, there's still a ton of volume to get through of people who are probably going to want to sell. So
Yeah.
I don't know what the fundamentals are, but yeah, I agree. It looks like it's probably going to fuddle around a little bit, but then continue downwards, perhaps.
All right. So our MNQ trade is in trouble. Well, close to getting to
Stopped out
our,
yet?
not yet, but it's definitely it's now or never if we want to have a turning point. It's better happening soon. We're still on this tier 2, but as mentioned, this big recovery with that speed of the recovery was not the best yeah, technical setup for this level tier 2 zone to hold up. So we'll see. We'll keep it the way it is. Our idea is what it is. We're predicting the bounce off this tier 2 zone towards lower price levels, and either work out or it will not.
And let me check here. What's interesting, I just want to see MA Rush. So I had us on the 1 hour. I'm sure every other time frame higher than the 1 hour was still bullish. Yeah,
Yeah.
for sure. Bullish, like the 2 hour. Is it bullish? Yeah, it's definitely bullish. And we'll see. Yep, it's we still have our drawing here telling us what's probably going to happen if it does hit the stop loss. We're going to take off. And how's gold doing? Is it still
Good.
hanging out?
It's okay. I mean, it pulled back a little bit, but it's it's still very much in line with our prediction. I'm hoping we're gonna clear this tier this high volume node soon to see some upside acceleration.
Definitely.
Uh,
We have a question from Logan. Do the liquidity captures populate as they're happening in real time? Yes, they do. So even intra-bar, if the volume crosses, but they can disappear. So basically a liquidity capture will happen if for a resistance zone, the high of the bar, or for a support zone, the low of the bar, if the high or low is within the resistance zone or support zone, which is this rectangle, and price has not cleared the zone entirely. So the candle's not outside of the zone. We haven't broken out. If it's within the zone and there's abnormally high volume, it'll show a liquidity capture. If the candle then totally exceeds the zone by a certain threshold, there's a breakout, it'll take away the liquidity capture because the level's not holding up. But it does populate intra-bar immediately. It doesn't populate once price has moved away.
yeah.
Or at least it should not. Perhaps on trading on NinjaTrader, it waits until the bar entirely closes, but I'm not entirely
No,
certain.
I don't think so. If you have it on every tick, it should show it in real time. Yeah.
Definitely, if you do. Um,
All right, so let's look at a few more questions that came in. Okay, that was that one. There was a similar request for the Nifty 50, the Indian index on the daily time frame from Kiran.
Whoa. Zoom out. Are these all-time highs? I'm guessing so, eh? These are probably all-time highs.
Seems like it. Yeah.
Okay.
Yeah, we're approaching an historical high there, which will act as resistance. But yeah, quite a nice recovery. Also, I guess in the aftermath of the tariff situation, beautiful recovery, and now approaching the all-time high. So somewhat similar, a bit slower than the U.S. indices. Uh, but if
Not
I,
percentage-wise.
yeah, I
Just
guess the
saying.
move was stronger. Yeah.
Sorry, go ahead. No, I was just saying I was actually noticing that percentage-wise, wow, that went up way more than MNQ did, for example, didn't it? What did MNQ go up from? Maybe I'm wrong, 17,000 to 22 and a half? Or Daniel? MNQ.
I'm not so sure.
Oh
Let's
no,
have a
you're
look.
right. Yeah, yeah. Way more percentage. Um, and also back to all-time highs and a higher percentage gain. So yeah, I was totally wrong.
So I'm just muted for a second. There's an ambulance passing by my window.
And here, okay, yeah, so we came up all the way. So we're entering into this buyer zone. So there's basically like no volume up here. The only time this index spent any time here was back in last year, September. Spent a little time there before selling off. A lot of sellers here, but you've conquered it. We've gotten through the sellers, so that's very bullish. I don't know. This looks like very bullish to me. I maybe would wait to see if we pull back down to 25,000. But honestly, if you were trading longer term on a future contract, maybe scale in. I would try scaling in, expecting we might have some sort of retracement. But yeah, it looks super bullish, and it looks like we're going to come up and retest these all-time highs soon.
That's exactly what I was thinking too. I think that's
Scale in.
definitely in the books. So wait for a bit of a pullback and then enter into a long position here in the anticipation that the all-time highs will be tested, which coincides with a key resistance level as well.
Yeah, definitely. And okay, that's nifty. MNQ kind of hanging out still.
Just
So is
MNQ
gold.
is just chilling there, teasing us with potentially a small reversal, but I wouldn't hold my breath. It still looks quite. Oh, this is the daily contract, I guess.
Yep, I'm just getting some perspective here.
Yeah,
Yeah,
that's the
15
daily
minute.
chart.
Okay.
Yeah, but it's definitely struggling with that level as anticipated. Whether that's a sign that this level will be actually holding up, that's a different story. But you know, it's kind of uncanny sometimes how nice these reads are, and in fact, that prices are struggling. But of course, a struggle doesn't mean much. Could still mean that hey, prices will eventually go through it after a struggle. But definitely, there are signs of a struggle at this particular level. Things have slowed down. We pulled back a little bit. Still looks bullish, but you know, maybe we're gonna see a bit of a pull, and then at least we could go to our break-even point and manage this trade a bit more actively once we get there.
Yep. And if that does happen, there's a little bit more sell bias here, but it's kind of even. I would wait, like our targets are all the way down here. If this does struggle and it comes back down, I would consider then taking profits maybe here if it seems to be holding up as support. Because just like with liquidity IQ, where once resistance is broken, it can act as support. Same thing with volume IQ. If there's a high volume node and it says that there's sellers there, but then we go up through it, well, it means there's not that many sellers anymore, right? This is like compiled over 500 bars. It doesn't mean that more recently this isn't a bullish buying area and things have changed. And if we check something like a 5-minute chart, I wouldn't be surprised if there's more buyers down here in the profile. It would make sense. No, there's not, but it's not as sell biased as it looks on the 15-minute. It's an important zone. But yeah. And we
Yeah.
can see, look, that's great right here. Yeah, it's starting to slow down. Definitely proof that, yeah, the tier 2 acts as a decelerator. For sure.
Can we look at Bitcoin quickly? I
Yeah.
think
Futures.
so. There we had this wick up
Oh,
almost once again towards this resistance level. We kind of missed it there as we left our tier 2 zone. Full potential long, and see how it wicked into this resistance level on top and struggling once again. So this is a really, really important level. The 109,000, the 111,000 that prices of Bitcoin have been struggling with for a really long time. And but once broken, I think it's going to be flying off to the upside, but it just may take some time for this level to actually shatter. Yeah.
Yep. And it's got that textbook, looks like it's flying off a ramp here in the volume profile, the nice curve. Probably going to come up to here for liquidity capture because, psychologically, anyone who was shorting expecting we're going to come down, they're starting to panic, right? Because they're seeing, hey, if it goes through there, it's going to break out. So they're starting to cover prematurely. Longs are perhaps buying, expecting we're going to go up to there. We'll see what happens once we get there. And let's take a look at, I just want to see.
What about platinum real quick?
Sure. Is there micro platinum? No.
No, I don't think so. No pullback. This was a contract. I was hoping for a pullback here and then enter in the direction of this breakout move, which is very explosive, as you can see. But no pullback yet. Okay. So yeah.
Still got our alert there.
We'll have to wait. Yes. But that's
about,
probably a bit out of sight now.
How about copper? Copper, we thought back here that it's going to go to all-time highs, or sorry, recent all-time highs, and it has. It has gone up through the resistance of the past 3 months, I think it was. It's the highest it's been. Still would wait for a pullback here. This is really nice if you're long. That volume is going up the escalator here. It's a nice clean curve. But if you're late to the game on a trade like this, I would always wait for us to come down to a zone that has a lot of volume. Because the less volume, if you go higher and there keeps being less and less volume, it means traders in the market are less and less willing to buy. They're waiting. They would rather sell and take their profit, and leave the guy who's late or the trader who's late to the run to buy their shares or contracts while they wait to re-enter or scale in.
So you wouldn't go short there?
No
that could
way.
Be a trade too.
No, I would not go short here. Maybe it's a good trade, yeah.
This is the classic bounce trade off a key resistance level to the short side. And if we had some liquidity captures, maybe this could be extra evidence that, hey, yeah, we may bounce off. Gold, unfortunately, is retracing a little bit. So it's really struggling with that tier 2 level. It went right into it. And this shows you once again what these levels can do to price. We had this big down bar there. Still a positive trade. And our outlook is still bullish there. We just have to, wait it out to some degree to see what's happening with gold.
Yeah, it's not that deep. And how's MNQ doing?
It's chilling.
Also struggling. Okay, good.
Yeah. Yeah, stuck at this level.
And again, good for us. Yeah,
it is good. But I wouldn't hold my breath for this one. It's
no.
Overall, I think it's a smelt bullish right now. But
and look at this. Sorry, go ahead, Daniel.
Oh no, I just said it. It's a quick recovery off that support level. That's
it's not bearish.
It's not bearish, yeah.
And another thing that's not bearish is I've only got liquidity IQ on the chart time frame right now, but you can see this is an old support level. And look, it's just this is why these levels are so nice. This was an old support level. Price struggled with them, then broke through them. Okay. Price then came back up and bounced off them, this old support level. But then these new pivots that had high volume, were volume significant, we call it, they came up and tested this level. This old level then got replicated going into the future because it held up. So these are actually basically the same level, but they're based on different information. Just shows the level stays important. But look what happened today. We broke through it and there was liquidity captures, which means the market saw that we were breaking through something we used to not be able to break through. And they did it with a lot of volume. So there was a lot of buying. This is like a classic, I guess, inverted. Is it an inverted head and shoulders? Maybe a little bit, but it's a nice W right here, right? Where we
definitely
made the
double bottom.
low,
yeah.
We broke we made a higher high. It's not bullish. I mean, not bearish necessarily. Gold is recovering a little bit.
And if you have any questions, guys, please put them in. Let me just see here. Okay, that's a good question. Once a position is in the zone of control, level 2 zone, as per a volume profile, do you use any confirmation indicators to get extra juice so that the move may actually play out as a bounce move of that level. Yeah, it could be any of our power bundle indicators or even super signals or super trend bullseye. All of these could act as extra confirmation that you anticipate price move may be panning out. So we can put it on right now. Let's see what's happening on MNQ, where we are right in that zone of control and expecting a bounce to the lower side to see if we get any confirmation from our signal indicators.
Yeah, so here, for example, like what I always like to do is if the stop loss is too far, and maybe it would be a nice new feature to have some sort of option for stop loss distance to an extent. But here, the long trades, 6.54 profit factor. Long win rate, 73%, basically. And it's long right now. So that's not bad for us, right? It's over the last 750 bars. I want to see if I can extend it. But one other thing is, that's a little too much risk for us because we're also taking into account. So now over 1,250 bars, it's doing a little bit less in the long side and we're long. Okay. But what I'll always do on this indicator, or on the AI indicators, is I'll hop over to another time frame immediately if I don't like the statistics. Because, day trading, even sometimes the 15-minute chart is a little too long term if you're just trying to get a quick day trade. And we'll see what they tell us. So here with 1,250 look back, it's doing very well on the long side and the short side. A little bit way less win rate on the long side. And right now it's telling us to be short. I don't blame it. There are some liquidity captures up at this resistance. We're just using the reference time frame. But we're comparing this against other information we have, right? Which is this tier 2 zone on the 15-minute that we're bouncing off of the tier 2 zone. The indicator's short. It has won a lot of the time. There's been a lot of short trades. That's not so nice to see. But it is what it is, right? It doesn't mean that the rest of our analysis isn't correct. A lot of the time, too, if you're going to trade these signal indicators and combine them with these tools, just make sure they have really exceptional results and try to get in on them and use the stop loss, or try to make the stop loss line up with what you can see from the other indicators. To be honest, though, looking at these signal indicators here, I'm kind of starting to agree with them a little bit. With the divergence cloud and 1, 2, 3
Now
strike.
you're telling me after being in a long position?
Maybe if we check, but one thing here, I'm having time frame tunnel vision. This is the 5-minute chart. I never trade the 5-minute chart. It's 15 minutes or 30 minutes at least. And when we go to the 30-minute, they're not short. On the 30-minute, it's not short on gold. Was 1, 2, 3 strike short on gold? No, no, it is short on gold recently. And what's its results? It's doing worse on the short side a little bit than the long side. But I wouldn't be checking the 5-minute when you're trying to make a nice day trade. It's just too small, at least for me, unless you're like auto trading. But yeah, divergence cloud, short, 1, 2, 3 strike long. It's a little indecisive. It's really, I would rank what's happening on volume IQ a little bit more important than what the AI indicators are telling us until it makes a decisive break in either direction. At which
But
point,
even with
really
that
good.
long trade there on MGC, it would have been a nice trade entering there. It's just, I guess, a different at the time the signal came in. We do have 2 profit targets. Yeah, we booked profit twice in that period, which is definitely encouraging. Yeah,
Oh yeah, okay, yeah, here a profit. Here, this I think might have been a loss relative to the entry.
maybe, but
Yeah,
still, overall, I think with an entry like this, you could have booked some profits along the way. Certainly.
and this also requires you might see, like Daniel said, I think Daniel, you actually specifically said this would be a quick scalp, right? You were hoping it was going to come down and bounce and go up quickly. The
Yes.
AI indicators, they're not planning for you to, at least on a 15-minute time frame. It's not really, especially in these market conditions where it's slow, it's not a scalp. I mean, look how long some of these trades last. On average, I wouldn't be surprised if the trades are lasting 15 hours on average, 12 hours. That's not a scalp. So while the indicator might be long, it's just something to take into account if you're using the rest of our indicators. But look where it requires your stop loss to be in order to hopefully replicate whatever results it has shown historically. The stop's pretty far away, and that's not the game we're playing right now, at least with this trade. We're taking an opportunity based on other information. I don't think they invalidate each other.
Yeah, agreed.
And I want to see volatility crusher. If we were taking a scalp, the indicator I would look for a scalp is probably volatility crusher a little more because it'll notice kind of the explosive quick movements. And it's kind of more selective volatility crusher, right? Like here, that's a scalp trade, but it doesn't call the scalps out very often, especially not on this symbol. Let's check MNQ. Nice, it's having trouble. Like here, nice scalp. It hit profit target 1. And look, this is a good, like here, okay, it hit both its targets. But look where, this was just coincidence, but look where the targets stopped getting hit. I mean, it hit both targets. It stopped at the support level. Over here with Volatility Crusher, takes the trade, hits target 1, but target 1 lines up with the Liquidity IQ support level. Target 2 is way out of that bound. If we were taking this signal, we would have confirmed with Liquidity IQ that maybe that one's a little bit too greedy, right? Maybe let's place our target closer to the actual support like we have done here on the current trade.
Yeah, exactly. Okay, a couple of questions that came in. One question from Logan. He wants to know, he's a new user of Divergence Cloud. Does it have a plot for a stop loss for use in Strategy Builder? Yes, Logan, with our new AI versions of Divergence Cloud, we in fact have exactly this. We have a stop loss for every entry signal. It's a trading stop, which can be read out by the Strategy Builder. Absolutely. So that's a yes, both for NinjaTrader and for Wave. In fact, is that possible? And Paula wants to know, when's your next Volume IQ and Liquidity IQ class? That's a good question. Nothing is on the schedule right now, Paula. We do have our pre-recorded masterclass on Volume IQ, which also, I believe, has some Liquidity IQ components. But Paula, if you send me an email, I'll send you some other videos that we have recorded in the past on specifically Liquidity IQ and ME-Rush. All right. Well, okay. Paula says thing. Will do. Okay. All right. So we're nearing the 1.5 hour mark. Let's just review our trades where we stand right now.
Yeah. Let's take a look at MNQ.
Okay,
MNQ
so
starting to go in our favor, I would argue.
it's definitely slowed down. That is a good sign. It's slowed down. We're coming down a little bit towards our break-even point, which is not too far away now. We're not out of the woods, of course. I want to see that the price actually leaves that big high volume node. But I like our prediction that prices will struggle with that level. And this could be a turning point. Whether this is going to be a lasting turning point remains to be seen. We are still very bullish, but definitely a turning point has been noted so far. So let's see how this pans out. We're going to keep this trade open. It's on autopilot as of right now. We have our stop loss in place. And also our target. We may move our target should we be in the luxurious position of getting this trade profitable to close it out, just to hedge ourselves against an overall bullish market in general. And for gold is still stuck in that level. Unfortunately, we didn't see it break out of the tier 2 zone yet. As mentioned, this may take a while. It may go back and forth a little bit. I'm still hopeful this is gonna, eventually go towards our target move. So
that was a great limit order, though. Look, it came down. You basically called it where it was going to bounce, at least for the meantime.
Yep, absolutely. And we'll see what I think we're in decent shape for gold. MNQ is coming down a little bit, which is nice to see. And
hop back to MNQ. Here we go.
Yeah.
Okay.
So we'll see. Yeah, it's coming down. Good turning point. And yeah, if we so let's see what we see now here. Actually, Nicholas, you see the same thing? We did actually break above a resistance level prior to this. Now prices is coming back towards this level, which
I don't think it's an important resistance level, though. This is the 5-minute time frame. I've got it set to the chart. I don't pay attention to liquidity levels from the 5-minute chart, especially when it's not even associated with a lot of volume. Like there's a tier 1. I think if we come down there, it's going to blast through there down to here. I think that's more likely.
All right, let's see.
This isn't an important level. I'll put it on the 1-hour liquidity IQ, which is what I usually use. So yeah.
Yeah, well, definitely. Even though we have to close out the session in a couple of minutes.
Keep the trade open.
Oh yeah,
Nice.
we'll keep you guys posted on our Discord channel as these trades will pan out. We'll see. Hopefully, with some good news. I'm not sure if somebody followed us or replicate our ideas here. Um, so yeah, in fact,
And would you
yeah.
use the 15-minute reference? I put it on the 15-minute reference time frame, so you would consider these significant, and I guess they are. I mean, the level we broke, I wouldn't care about this level too much. I wouldn't trust it, but would you? Would you think that this is
I mean,
good?
ideally it coincides somehow with high volume node. This one is kind of a no man's land in a low volume node zone where there's not much trading volume. So, but yeah, I mean, prices may bounce off this level, and if we actually get there, maybe just as a precaution, maybe take one position off or something. But let's see how it pans out. I think we may see a move towards this level, and then we can decide what to do.
Sure, yeah, and really this is what I would think. You know, we're saying it's going in our direction right now, but it's still bullish, right? I mean, we still
Yeah.
bounced up, and so long as this big chunk of volume does not get broken to the downside, it's not going in our favor. We have to lose this level right here in order to make it so that the market's telling us that anyone who bought up here basically has been, you know, they've made the wrong choice. For now, though, it's being bought up here. We have to get below there, um, you know, and maybe these sellers will stop in. We'll see a loss, and it's kind of like psychologically what we were talking about before, the 780 or 680, 580 level. Where right now price is basically fighting for 22,800. If we don't get below 22,780, we're looking, you know, upwards to 22,900 and 23,000.
Yeah, exactly. So yeah, we'll see how this is going to pan out. At least we did see some price struggle there, which is a confirmation that this high volume node, uh, yeah, had some influence on future price action, which is as we predicted. So that's a good sign. Whether it's going to be a full turn, it remains to be seen. And Logan, for your question for the Power Bundle AI generation, this brand new version of the Power Bundle AI, send me an email, please, afterwards, info@tradingindicators.com, and I will let you know what your options are to get access to these, yeah, to the AI version of our Power Bundle indicators. All right, perfect. Okay, so with this, I think we're rounding it up here. I'm going to see one more time if there are questions in there. No, no more questions. I do see some stocks. Karen, we're gonna skip those stocks because I think people don't really know what this one is, especially on the 5 minute time frame. We typically don't day trade, yeah, stocks on these smaller time frames. We typically use that for the futures for the stocks. We are a bit more on the longer time frame perspective. All right, perfect. So I don't see any questions coming in. Just one more here. For the chart settings on the 15-minute time frame, typically liquidity IQ on the 1 hour. That's right. Volume IQ, there's no time frame setting, so just use the default settings there.
We put MA rush on the 1 hour, not volume IQ. Yeah.
Yeah, that's right. So, and if you I typically, even what I do often is I use the 5 minute time frame to time my entries, and then use liquidity IQ on the 30 minutes if markets are moving a bit faster than today's. But today, I think it was a wise decision to use a 1 hour time frame. For getting our support and resistance levels, and also an overall read on the trend, just because markets are slow. But you know, you can as well use the 30-minute time frame, and sometimes you just play around with it a little bit, depending on the symbol that you're looking at. You know, see where you get the clearest read, and in the end, it's all about getting a compelling story about the market. And once you have that, then you can. Wow, what happened there for oil? Can we just keep that? Oh
Big
no, okay.
bounce from the tier two.
Yeah,
Now it's struggling clearly with the resistance. I still don't believe it in either direction, you know, whether it's bullish or bearish. I don't think this is a sign it's bullish.
yeah. But once again, here you could maybe potentially play the extremes again. And go potentially short there off this resistance level. Maybe put your stop loss all the way above the all-time high. Oil is a cheap contract. So for quick scalp, maybe that could not be a bad idea.
Yeah.
All right, perfect. Okay, guys, we'll keep you posted in Discord on as to how these trades pan out. And there's one more thing. Paula wants to know, what does 1 to 3 strikes say on that oil contract? Yeah, let's put it on. Let's check it out.
One, two, three strike on the 15-minute has us long from this morning around 4 a.m., but I wouldn't really listen to it. So it has us long here. It already took partial exits. Sure, every single exit was profitable. Nice trade. But 1.2 profit factor, 1.3, 45% win rate. That's not very good for 1, 2, 3 strike. Maybe what I would do instantly is check another time frame. Is it smarter on another time frame? On something like oil right now, which is super rangy, I would actually probably look at a longer one, like the 30-minute. Here, 5.21 win rate on the long side, 64% win rate, and it's got us being long right now, and it hasn't taken any exits. I think this would be a better idea from 1, 2, 3 strike. What do you think, Daniel? Like maybe trying to enter where it entered, which is like the low 65s.
Yep, it looks definitely better on that longer time frame. But sometimes, if the signals don't look so compelling, try divergence cloud. That's also an indicator, which typically also comes with a closer stop loss. And yeah, because it's a reversal indicator. Let's just see if that one. Yeah,
it's got a wide one here by chance. But look at this. Long, short. Look at the entry prices on divergence cloud. Look at 1, 2, 3 strike. Long here. A lot of the entries are happening at the tier 2 zone. So it seems like the chart is changing significantly whenever we touch it. The indicators are signaling. I like this for a long, because if we look at the stop loss, look at that. That's coincidental. The stop loss is right where the lowest support is at this point in time. It's a cheap contract. That's really not far away. It's 70 cents away. Yeah, if we come down to the tier 2, maybe it's a nice long trade or a long scale in opportunity. Maybe we're going to see some move up. It certainly did fall a lot, and there hasn't been any new news on Israel, Iran. Maybe I'm out of touch, but yeah, there's potential for a little swing up. A lot of volume missing here.
Yeah, it is really crazy ranging. I mean, it's not surprising after such a massive move that we've seen that it will consolidate, but who would have thought that this consolidation pattern is so tight, well, seemingly tight, at least compared to the overall move. And yeah, it lasts for such a long time. Interesting how things pan out sometimes. But yeah, consolidations typically last longer than the actual trend move. And this is one evidence of that. All right, with that, let's close down the sessions. We'll keep you posted. I hope you enjoyed it, and I hope it gives you a glimpse on how to use our indicators and how we look at the markets, even in slow market conditions. So we are all set. We're on autopilot of our stops and targets, and we can do a bit of a retrospective perhaps in our next lunch and learn session on Tuesday. With this, have a nice trading day. Have a great 4th of July. If you're in the US, enjoy your short week. And then we will see you all on Saturday for our next live scanning session, or otherwise during our next lunch and learn session next Tuesday at 12 p.m. Eastern time for both sessions. Thanks, Niklas, for your help, and talk to you soon. Bye-bye.